IndusInd Bank is making headlines after revealing discrepancies in its derivative portfolios. The stock has crashed over 30% over the last 5 trading sessions. So what exactly happened? Let's break it down. On March 10th, the private lender, during an internal review, flagged issues in its derivative transactions from the past 7 to 8 years. The bank estimates an adverse impact of about 2.35% on its total net worth. This will be taken as a one-time charge in its Q4 FY25 profit, potentially denting its total profit by about 1,500 crore. But what exactly went wrong? IndusInd Bank disclosed that until 31st March 2024, the bank used internal derivative trades to hedge foreign currency borrowings and deposits. These mismatches went uncorrected for 5 to 7 years, leading to distortions in its financial reporting. Let's hear it from the CEO himself, Sumant Katpalia, on what exactly happened.
If you want to understand the details, I think in our treasury unit, you have an internal trading desk, which is the ALM desk, and the trading desk. On these internal deals, these internal deals are forwarded to the external desk for placing it outside. The internal desk follows a hedge accounting, while the external is on a mark to market. So over a period of time, there may be a gap, but over the period of the maturity, it actually evens out. But if you pre-terminate a deal, I think the anomaly exists, and that is where the problem arose.
The big question that most brokerages and investors are asking is, why wasn't this fixed earlier?
We found this anomaly around October, and that is where we started our internal assessment, as well as we hired an external agency. At that point of time, we did not know the difference, and we knew that there were 2 deals getting accounted incorrectly, but there's so many deals in that, so we did not know the real impact. And I think as soon as we got to know the impact, we held a board meeting, and we informed our board, and we did the disclosure.
As soon as the news broke, IndusInd Bank shares crashed 27% on March 11. Over the past 5 sessions, the stock has plunged nearly 30%, wiping out crores in investor wealth. Brokerages were very quick to react. They stated that it would take a lot of time for investors to rebuild trust, and brokerages also noted that IndusInd Bank had lost credibility. Now, brokering firms, both international and domestic, rushed to cut their target price on IndusInd Bank shares. But this isn't IndusInd Bank's only concern. Apart from the derivatives issue, the bank's ex-CFO resigned just before the Q3 earnings. The CEO, Sumant Katpalia, recently got only a 1-year extension instead of the 3 years that he applied for, and further, stress in the bank's microfinance portfolio is also expected to impact margins going ahead. The CEO himself acknowledged uncertainty, saying that maybe RBI is uncomfortable with his tenure. Listen to him discuss this in an analyst call.
I don't know what is the rationale for them to give me 1 year, but I think they're uncomfortable with the way my leadership skills of running the bank is, and we have to respect that.
In response to these concerns, the RBI has advised IndusInd Bank board to look for external candidates for the COO and CEO positions after the current CEO's tenure ends. Meanwhile, the Hinduja Group, which is the promoter of IndusInd Bank, might need to pledge up to 80% of their holdings if the IndusInd Bank stock falls below the 600 rupees per share mark, according to Macquarie Capital. Despite the turmoil, the bank promoter Ashok Hinduja insists that IndusInd Bank's financials remain extremely strong and that it will receive full support if capital is further needed. The CEO also reassured investors, stating that the full year won't be a loss and Q4 will also be profitable.
The full year will not be a loss at all, and I think the Q4 itself also will be a profit.
Further, the bank has also appointed a reputable external agency to independently review and validate all of the internal findings. The management believes that the external agency will give its final reports by the end of the current quarter. So what's next for IndusInd Bank? While brokerages are divided, Hong Kong-based brokerage CLSA remains optimistic, maintaining its outperform rating on the stock. The brokerage believes that fundamentals will take over in the long run. CLSA also highlights 2 positives. The first, a recovery in the microfinance sector, and the second, improving banking margins due to RBI's easing cycle. Most other brokerages do believe that it will take several quarters to rebuild credibility. Earnings visibility is also muted for FY26 due to the weak MFI cycle and stress in other unsecured retail segments. As a result, any investment case for the stock will be difficult to build. Further, the stock price is currently weighed down by the loss of investor confidence and the negative sentiment surrounding it. As a result, IndusInd Bank's stock price might take some time to rebound and rebuild its faith in investors. Let us know your thoughts in the comments below, and always stay tuned to moneycontrol.com for more news updates.